Hello, today I would like to talk about the stock market and then two parts in specific, stocks and bonds, which in fact are the most basic parts of the stock market. From that on you can try to understand a lot more about the stock market, but these are the two basic things where everything actually goes about. So let's start with stocks. What are stocks actually? A stock is actually a tiny part of a company. You have you have a huge company, for example, Apple or Microsoft, or you got General Motors. General Motors was. It's a huge company, and it's divided in tiny parts actually, and these parts can be owned by stockholders. These are stock shares actually. And if you own such a part of if you own a stock share, you just own a tiny part of that company. And why would you actually do that? Why would you choose to buy a part of a company? Well, it entitles you to two main rights actually. One right is the right that you are partly owner of the company, so you can actually decide for a tiny bit who's ruling the company and what are the strategies, what strategies are for that company. But even more importantly, you are entitled to pay out the profit, dividends, called dividends. Each year, a company can decide to give a part of the profit that a company made to its shareholders in form of dividend, and then each owner of a stock share gets a small amount of money, a small amount of the profit that a company made. So actually, these are two rights that you have as a stockholder, and these are important and these are nice to have. Aside of the dividend, what you also can do with stocks is buy and sell them. And if you buy a stock for, let's say, 25, and you sell it for 30, you've made a profit. So that's also the part that you can do with stocks. Stocks can be bought daily and each and every minute actually, as long as the market is open, with the other stock market, and you can also sell them whenever you like. So that's actually what stocks are. And stocks are used to make profit, but if it goes bad with a company, the stock price can go down as well, and you can make losses as well. So you can actually buy and sell stocks, and it happens at the price that people want to pay for them, or that a company is worth in the eyes of the current people that want to buy or sell them. It's actually a basic thing, the stocks. The next part that's important to notice is obligation or debt paper actually, bonds also called. And bonds are something else than stocks. They have to do with each other, but not a really lot. You can have government bonds and private bonds, or bonds of a company, and both are actually a debt of the government or of that private company. So if you actually own a bond, you just have lend money to that company or private business. So for example, you got bonds of Apple or the American government, where you can lend $1,000 to that business, and the business, on its turn, proves you or entitles you to a small revenue each year. You get a small amount of money, let's say 4% of what you have lent the company each year as interest. Sometimes it's 4%, 6%, it can be, let's say, any amount of percentage. And you will receive each year that amount as interest, just as you would receive interest on the bank account. And at the end of the period, the bond will be paid back. So if you own a bond, then you will receive the money that it was originally worth. So the $1,000. The only downside to a bond can be that if the company goes bankrupt, and that counts as well for a stock share, your bond is worthless and you will not receive any money back. That also counts with stocks. If a company goes bankrupt, your stock is worthless. The only difference is that the money that's been lent to bondholders will be paid back earlier than stock money. if a company would go bankrupt, they first try to pay back the money to bondholders, and would then any money be left over, that goes to the stockholders. The last thing you should know about bonds is that, like stock shares, they can be traded every day on the market, the stock market, and that the price that a bond is worth may differ as well. So you can also make profit on trading bonds, and also make losses on trading bonds. So just work like stocks on the market, only that they usually tend to differ less as a matter of price. So these are the things I think you need to know about stocks and bonds, the basic principles in the stock market. From this on, you can try to understand a lot more about the stock market, a lot more about the stock market's principles, and try to buy bonds and stocks and whatever you like. But these are the basic principles. So I hope you understand them. If you've got any questions, you can just ask them, and I'll try to answer them. I hope you've enjoyed this video, and I hope to see you soon.